Hello, good afternoon. It's Adil Fazal, market analyst at CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit www.cfds.com to certainly learn more. Alternatively, visit the educational website, which is www.cfds.education. Okay, this is a European afternoon market wrap up. Okay, European market afternoon wrap up. So let's get to work. Okay, so in terms of the Asian markets, first of all. We had a mixed session with the Asian markets really coming off the highs. That's really the story. The Nikkei up almost 0.6%. The Hang Seng minus 0.15%. We had the Shanghai up plus 1% overnight. Then it actually sold off towards the close and it gave back its gains. So up by 17 points, up by plus 0.5%. So certainly a mixed session, and that obviously led to the European markets potential profit taking. Basically, we had with regards to the FTSE 100, we had WPP with weaker earnings, and that certainly put pressure on the FTSE 100. In terms of European markets, we have the euro now potentially gaining support, so that's certainly exerted more pressure on the actual FTSE, on the actual European indices as well. We've had the IFO expectations out this morning. They have come in slightly mixed. We've had the current assessment at 112.6, which obviously confirms a weakness from the previous euro strength, and obviously Volkswagen scandal and the fallout from there. Okay, expectations slightly higher, so pretty impressive, but a lot of that states that the market's already baked in that information. Hence the reason why the actual euro itself now is starting to find some support and actually potentially finding a base. We can see here, if I bring up a daily chart, you can see that we have had a green candle in today. We did try to push up earlier on. We obviously sold off quite substantially. The 4-hour chart itself again is trying to potentially put in a reversal or find some strength. Now all these support levels certainly have broken, and the QE or expectations of QE certainly has settled in now to a large extent in terms of the actual euro itself. And now whether or not we can actually sustain a potential reversal. Now expectations this morning out of the German economy. I'm just going back now and trying to see if I can relate to that. We've had IFO expectations. Okay, so I can't find the German data that was out this morning at present, unfortunately. Just news with regards to PBOC. Nothing other than that, other than the weekend news. So far, it's all about Mr. Draghi and obviously the weakness in the euro, but that to a large extent has been factored in now, given the fact that we haven't put in the actual lower low. Okay, we did actually rally initially, as you can see here. The rally in the euro led to the sell-off in the European equities, etc. And now, like I said, we have put in a potential base in the euro. Any support around this zone here, 1.100 to 1.1, will be support for the euro. And as we all know, support in the euro equals top in European equities, and that's exactly what we're seeing thus far. Okay. Now, with regards to the actual Fed this week, that certainly seems to be on everybody's mind, and whether or not the Federal Reserve will now be forced to raise rates. It's going to be very hard, given the fact that China and obviously China and the ECB have certainly obviously enacted policies that are going to weaken their currencies, and thereby obviously by default the dollar has obviously risen. So if the Fed were to raise rates now, that will be a double whammy, and that would hurt their exports even further, and that would obviously cause the markets to certainly to fall as well. Now, the theory at present is the fact that if Miss Yellen were to raise rates, she does have the ECB and the PBOC to fall back on. So that's certainly a theory that's going around as well. So that's certainly something that we need to remain open to and privy to. So that's something that we have to certainly consider, okay, and take into consideration from that perspective. So there's a lot of theories right now from a fundamental trading perspective that I can't really sum up in this video right now, and I'll try to do it in the US market analysis, okay? But for now, for my trading, from my perspective and my understanding, it's all about the Euro USD for European equities. Okay, it's all about the Euro USD. If Euro USD is into support, expect European equities into resistance, and vice versa. This is now coming into support for the euro, therefore European equities will now come into resistance. And in my interpretation, in terms of the European ECB version or ECB, itself doing QE, that's actually negative for your US equities. Okay, so bear that in mind. Yes, we've had the Chinese rate cut, okay, and that certainly has been absorbed to a large effect. But the fact that the ECB and the PBOC were to obviously enact easier monetary policy, then that does actually become a negative impact as well, especially from the ECB's perspective, because the dollar itself is rising. So that's something that you need to take into effect, because QE by the ECB and the PBOC, or any type of stimulus, is actually an interest rate hike for the US markets. So that's something to take into account. And then I'll explain why that's the case, because you're seeing weakness in the likes of the Russell, in the likes of the Wiltshire, for example, and so you are seeing weakness in a lot of indices. In that, obviously, the Dow Transports as well to a large extent. So this is something that we need to consider. Also, the VIX is actually basing and potentially making support as well. So again, these are all factors that we are going to consider going forward. But from the European market perspective so far, you are seeing the euro having the major impact, okay? And that's why you're seeing weakness, relative weakness in the European market so far. You currently have the FTSE more or less flat, the German DAX slightly higher or more or less flat. You have the CAC weak, and also Euro Stocks is certainly under pressure as well. So the stellar gains from last week certainly are being digested or potentially reversed as well. Okay, from a technical market perspective, let's have a look at the markets now that I've explained the fundamental picture. The daily chart itself for the DAX is obviously approaching potential key gap fill resistance. 60-hour chart, 60-minute chart of the German DAX, we're trading sideways thus far. Okay, 10-minute chart really is the key, because you have several unfilled gaps below. So this is the first gap that we need to potentially fill on the downside from the German market's perspective. If I just connect the pivot highs together, this is basically where we are. We are holding this key resistance, so the resistance so far intraday we are holding, and it's the same resistance zone as the Friday's trading pattern. So again, this is something that we keep an eye out for, and we certainly remain vigilant of that the failure of that resistance level to be broken. Okay, and like I said, the unfilled gap below. We did have a report out from Bubba. Now let's just have a look at the report. If I can go back in terms of Bubba monthly report on the German growth slowdown, so certainly a slowdown in global growth, but it's 1.8% year-on-year forecast, etc., which is probably too optimistic. Despite slower Q3, German economy strong, positive CPI, HICPC in overcoming months. We did have weaker data out the UK. CBI trends, total orders -18, and trends selling prices -7, and US earnings continue to dictate as well. But from a European market perspective, the fact that we haven't taken out Friday's high is certainly a bearish factor. Okay, looking at the French CAC now, this is an index that I'm short, and I remain I have a bias on bearish on this at present. We're holding previous support equal resistance, and we've pierced through that 200 MA. Yes, we are aware that there is a inverted head and shoulders pattern. That's something that we're all cognizant of. Okay, and we'll see whether or not this can be sustained and whether it continues. If we do break higher, then you are looking at the unfilled gap above to be closed on the French CAC. That's the next resistance zone. But for now, we're certainly showing weakness on the French CAC. The 60-minute chart on the French CAC itself, again, we have failed to take out the high from Friday, so that's definitely considered to be bearish. And the market has failed to play out this bull flag, so therefore considered to be bearish. A 10-minute chart of the French CAC, you can see that we do have an HNS formation on here, and we have this unfilled gap above which hasn't been filled yet, so therefore it is considered to be bearish also. This is your diagonal trendline resistance, and this is where we're looking to potentially hold as resistance. So this zone here at the 4905, okay, zone for the French CAC. Unfilled gap above remains unfilled, and we'll see whether or not this can sustain. But at present, you are looking at a potential for a HNS formation as well. So this is something that we need to be mindful of. Okay, so that's something that we're looking for. You do have a intraday. I mean, you've got a potential here in terms of obviously it's contracting wedge pattern. And then obviously a breakdown below. The unfilled gap is a target of the French CAC below, currently at 4806, so certainly keep in mind on there, okay, in terms of price action on the downside, and that's certainly a zone that will certainly come into play. And like I said, a lot of the bullish news certainly looks to be factored in at this current juncture. especially the way the US, the US markets are set up, and that's something I'll discuss in the next video. The Euro stocks, okay, let's have a look at the Euro stocks daily chart. As you can see, a potential topping tail on Friday, a hanging man type candle today thus far. Yes, we are aware there's an inverted head and shoulders, and that's something certainly open towards that. Okay, a 60-minute chart so far. Like I said, we still failed to take out the highs from last Friday, and therefore we are looking at weakness thus far. Okay, the 10-minute chart of the actual Euro stocks, as you can see here, again failed to make a higher high. When at the time I took the French CAC short, we were holding lower lows, so on lower highs, and we have broken out thus far. So we'll see whether or not that can sustain itself. Again, all eyes on the unfilled gap below, and that's the important part. Okay, you're looking at this here, and here we go. Okay, so this is the zone that we're looking at, and this is what we're looking and focusing on. Okay, and thus far. Okay, that's basically the zone that we are interested in. Unfilled gap below at 3350, a potential give back on this massive rally that we've experienced thus far. And that's basically what I'm looking at in terms of European markets. Now, the last index I look at is the FTSE 100. Looking at it on a 10-minute chart, you have the H&S formation, hence the reason why my bias remains bearish. 60-minute chart, you have this potential double top pattern at 6450, 6445. We have broke out to 6480, which was a Friday's high, and the market has failed to move and continue on the downside. The 10-minute chart of the FTSE, again, like I said, it's all eyes on the H&S formation, although it does look as if it is negating that pattern. And my stop loss remains at the 46550 region, so we'll see whether or not it gets stopped out there. We are holding this double top resistance thus far at 6450, hence the reason why my stop is around that region. The price of oil certainly is collapsing. The price of copper is collapsing. And so I am expecting a sell-off in European markets and global markets. As you can see there, the price of oil, we've had a fall from 44.9 down to 44 now, so a $1 drop. If you look at the price of copper, you can see again we are experiencing or witnessing a sell-off on copper too. Okay, and the Aussie and Kiwi are into resistance as well. So from my perspective, I'm expecting US markets certainly to reverse and pull back. The euro certainly to hold its support zone and therefore signal a potential risk-off scenario. And we are looking for a pullback earlier on or today and this afternoon in terms of global markets. Okay, so keep an eye on commodities. As you can see, commodities are certainly under pressure at present, and therefore, if the Chinese rate hike was that bullish, why did the Shanghai not rise today? That's the question. And why was the Hang Seng bearish? Okay, so you need to ask yourself that question. Then you rely on ECB. Mr. Draghi, he did state that he was going to discuss, not do. He was going to discuss further QE in December, and he has additional tools, which is really his old speech. Was he really that dovish? That's the question you need to ask yourself as a trader, and I already know the answer for that, and that's the reason why my bias certainly remains on the bearish side. Okay, so all eyes on Euro USD. As you can see, the Shanghai itself, no real movement higher. It's, to be honest with you, it's a relatively weak move, and if you look at the Hang Seng as well, certainly into resistance. So overall, especially with regards to UK data being weak as well, the German data relatively weak in terms of the Bubble report. A lot of the bullish news has been priced into this market, especially on the German DAX. Okay, you can see the MDAX as well, quite a stellar rally in terms of the fib ratio. If we take the pivot high, take it to the pivot low, we've even exceeded the fib 75% resistance. So we're into this potential resistance zone here. So it certainly seems to be overstretched, and certainly is due a pullback on a lot of the markets at present. If you look at the actual verify that with the DAX as well, you can see that we failed to take out the high on Friday, which from my perspective is considered to be a risk-off scenario. Okay, so these are all things that I'm going to be considering in terms of trading going forward. Again, it's all about the US markets now, so over to the US session, and we'll see exactly how that responds, and then we'll be able to gauge a better idea. But the fact that the Shanghai did not rally post the rate cut on Friday certainly is a negative sign. Okay, folks, goodbye now.